Hi there, you're watching Market Cafe on ET now with me, Shriyansi Singh, and over the next 1 hour, me and Priyanka Uppal will be taking you through 500 as well. And even the tech-heavy Naztech was on the back foot, inched down just about 1/10% thereabout. The one that's lagging the least among all three, but lagging regardless. Now, in terms of what else we're looking out for, now, of course, investors will be looking toward October's CPI, the likes of producer price index data that we're looking out for, as well as the retail sales numbers as well that will be announced on Thursday as well as Friday, respectively. So it's quite the data heavy week coming in for the US. But as of now, you do have that post-election rally taking a little bit of a breather at this point, to dropping about 5% over the past two sessions as investors absorbed OPEC's latest downward revision for demand growth, a stronger US dollar, as well as disappointment over China's latest stimulus plans. So that is what you have when you take a look at oil prices. When you take a look at Brent futures, you're looking at the WTI as well, just a 8-cent uptick coming in there as well. $68 per barrel is the kind of level that you're looking at when it comes to oil, at least. On Monday, you did have both crude benchmarks settle at their lowest prices since October 29. So that is the kind of move that you saw coming in. And there's, of course, the weaker
also. But then if you talk about gold also, that one also, the prices fell and they have fallen to nearly 2 months low. And this is all because of the strong dollar. And of course, there's an optimism about the economy and ever since Trump has come back. But then talking about OPEC Plus, spotlight on OPEC Plus, latest world demand is expected to rise by 1.82 million barrels per day in 2024 versus the earlier forecast of 1.93 million barrels per day. Now, next year, demand is expected to grow by 1.54 million barrels per day versus 1.64 million barrels. OPEC has also cut the supply.
Well, absolutely. Moving on then, meanwhile, you do have world's largest crypto asset, Bitcoin, that resumed its rally and briefly scaled those $90,000 levels. Now, investors are expecting the cryptocurrency to mark its journey towards $100,000 late for the crypto.
Okay, shifting focus to some more stories this morning. Now, Facebook parent Meta has cut the price of its ad-free subscription versions for Facebook as well as for Instagram, and this cut is by 40% for European Union users, limited set of user data. The monthly subscription service for the platforms in the region is fixed at 9.99 euros to 5.99 euros for desktop users, while it is 12.9 euros to 7.9 euros for iOS and Android users.
Rather than move across regions, led by a 54% jump coming in sales in China. When you take a look at European sales as well, you're looking at an uptick of 0.8% there as well, but we're up in annual terms for the second straight month as well. According to data, then EV sales scaled 1.72 million vehicles worldwide.
Okay, in that meantime, Richmond Fed President Thomas Birkin, who's called the current level of rates as somewhat less restrictive than it had been. And he said that he could see scenarios where demand rises and the central bank needs to focus on containing inflation, and others where businesses start laying off.
Rather than moving on, shifting focus to what investors will be eyeing later today, then the US inflation print. Headline inflation is expected to edge up to 2.6% versus the 2.4% prior. The core aspect is also expected to remain unchanged at 3.3%, and on a month-on-month basis, headline to digest beforehand as well, with September core inflation ticking higher to 3.3%. Another month of uptick above the 3.4% level in the October's read may also likely question how much room the Fed truly has in terms of rate cuts then.
Okay, but then back home now, we've got our C2 has come in higher at 3.7% for the month of October. Now, this seems the biggest contributor. The same was high vegetable prices, with food prices index rising as much as 10.8%. Staying sticky as per RBI and analyst estimates also. Industrial production, on the other hand, managed production, that one rose the most to 6.5% level.
Well, absolutely. Let's keep it going then with this particular figure, and let's also listen into the commentary then that we had coming in from economists Sovadeep Rakshit as well as Indraneel Pan as they decode the reasons behind rising inflation as well as what to expect.
On month basis till date in this current month is about 5.5%. The vegetables has softened, which is led by a softening in the tomato prices because it's the cultivation season. Surprisingly, the onions and the potatoes are holding strong, and the focus, and even from an RBI's perspective, needs to also to a certain extent shift onto the core perspectives. We were looking at, or very tentatively sort of opening up ourselves to a February cut, but if because of Trump policies, etc., which will gradually get factored into the data, I think on a more sort of cautious side, the RBI might even want to skip February. But I think from the current perspective, we confidently call for a February. And December, however, is almost a zero probability game at this point.
All right, so let's just go across to Gaurav, who's standing by to tell us what are brokerages viewing at this point on the CPI inflation. Gaurav.
While inflation has peaked, we have seen growth is also picking up, and at the same time they have pushed their expectation for the first rate cut in February 2025 versus what it was in December 2024, and they continue to expect that 100 basis point of rate cut is what we can see in that cycle. Apart from that, when we talk about UBS, what they are saying is that they are expecting inflation 25, and at the same time they also have maintained their view that in the next rate cut cycle, which will not begin in December, we may see 75 bips of rate cut cumulatively. Apart from that, when we talk about Bank of America, they say that perishables are something which is leading this spike in the December, and that is the reason why we may see MPC keeping their, it is still manageable when it comes to core inflation. So all in all, when we talk about brokerages, they are echoing the similar view that we may not see rate cuts happening in the month of December, but definitely watching out on how RBI reacts on this data and how inflation pan out for the next months.
All right, thanks Gaurav for that update coming in. So there you go, those. Welcome back. Thank you so much for staying tuned into Market Cafe. Well, let's get you some more earnings updates then. And fashion and beauty startup Nykaa reported a strong growth in the second quarter. Of course, we're at 1,875 crore. And you do have an uptick coming in of 24.4% thereabout on a year-on-year basis at least. When you take a look at the revenue, when you take a look at the profit as well, that has also risen 71% to come in at 10 crore rupees as well. When you take a look at the beauty, and Snehi's joining in with the earnings fine print.
Well, yes, overall for quarter two, it's a weak set of numbers coming in from Nykaa this time around. If you take a look at the revenue, that is in line with our expectations. However, that's come in at 1,875 crores. We were expecting 1,887 crores, and we were expecting 114 crores. So that's quite the miss coming in on that front. Net profit has come in at just 10 crore rupees compared to 6 crores. It's up on a year-on-year basis nonetheless. However, we were expecting PAT to come in anywhere close to 24 to 25 crore rupees. It's come in at just 10 crores percent compared to 5.4%. We were expecting this number to be at 6.3%, so it's a miss on that front as well. Now, marketing expenses have gone up by 134 bips on a year-on-year basis on the back of new customer acquisition, investment in brand awareness as well as category building. The S&D expenses also have 5 crores compared to 2,943.5 crores, up 24% year-on-year. For the BPC segment, that has gone up by 29% year-on-year. For fashion, the GMV has gone up by 10% on a year-on-year basis. Now, if you take a look at the BPC segment, which is the beauty and personal care, the order growth of 45% year-on-year has been across the premium fragrances segment, and own brand performances of Nykaa have also gone up by 48% year-on-year. On the fashion front, strong content revenue in LBB is driving overall high revenue growth for the segment. They've also launched more than 260 brands on the platform in quarter two itself. So good growth coming in on this front as well for quarter two.
Overall, a miss on Nykaa. Thanks very much, Snehi, for all that earnings fine print. Moving on, Hyundai India also reported its number, and they reported muted set of earnings in the second quarter. Now, the car maker saw its quarterly revenue drop over 7% to 7%. And we did caught up with the MD also. We heard from the MD of Hyundai India, Unso Kim, who spoke about rising growth despite the demand challenges.
Due to the pent-up demand post-COVID, despite the current slowdown in the overall sales volume for the industry, HMIL continued to focus on quality of growth by maintaining an optimum balance between the volume, market share, and the margins. While the macroeconomic any potential opportunity to improve our volumes and the profitability.
Let's keep it going with Motown then. Mercedes-Benz India has launched the new AMC C63 SE performance luxury car in India, priced at 1.95. Plug-in hybrid in India as well. The company also has recorded its best festival season in India this time. In fact, Santosh Iyer, MD and CEO Mercedes-Benz India, was in conversation with my colleague Sumit Chaturvedi. Here's a slice of that conversation.
The last 2 years in terms of portfolio. So in terms of product launches, we may not have too much excitement for next year, but what we continue to do is to improve customer experiences. This is also the 3rd year of Retail of the Future, where we are now doing direct to consumer model, and here we are changing the paradigm, and this we will continue.
Diwali season, how was it? Festivals, how did they contribute? Was it better than last year?
So, recently when we concluded Q3, which is July to September, we closed at 21% growth at a time where the industry was minus or flat. For us, Diwali again was the best ever Diwali. For us, was our outlook. I think we are on track, and this should be the best ever year again for Mercedes-Benz in India.
All right, so a differentiated view, whereas the MD of Hyundai India, he talks about some challenges for the automaker, but Mercedes says the trend for premiumization is intact and it's the best festive season as for Mr. Peter Korte. In an exclusive conversation, he spoke about India has huge demand for new infra. Listen in to this conversation with ET Now's Anjali Palot.
Siemens just announced an acquisition of Altair for $10.6 billion. With that, we're going to...
is a big hub or is going to be. So what do you think places India sort of strategically at the center, or maybe, what would make India a global hub in terms of AI and other tech innovations?
Yeah, India already has abundance of skills and people that know how to code software. Second, there is a tremendous amount of demand with regards to new infrastructure. And thirdly, there is a huge push for increasing the share of GDP for manufacturing from 15 to 25%. And
from global firms and especially from Siemens into the AI innovation happening in India?
Yeah, that is twofold. Number one is, of course, we heavily invest into our own workforce. We are hiring a lot of software application developers in Bangalore and Pune in our major R&D centers. And two...
AG about their AI vision as well as their roadmap for India as well. But moving on then, Varun Beverages acquires PepsiCo bottler in Tanzania and Ghana to bolster its presence in Africa. Then it also acquired the remaining stake in Dynamic Technologies as well. Soumit is
acquiring 100% stake in PepsiCo's bottler in Tanzania and Ghana for an enterprise value of close to 1,940 odd crore rupees. The equity value of both these deals is close to 1,430 crore rupees. And also on the valuation side, if you look at the valuation seems to be quite reasonable for the valuation front. Now both these companies belong to SBC and they manufacture and distribute PepsiCo's branded non-alcoholic beverages in Tanzania and Ghana. Now the brands that they manufacture and distribute are pretty much similar in both the countries. Apart from that, in Tanzania, the company also manufactures and sells units, and in Ghana it has only one operational unit. And when it comes to the market share front, PepsiCo commands a major market share in Tanzania of around 56 odd %, but in Ghana the market share is a bit lower at just 13 odd % for PepsiCo. Now apart from that, Varun Beverages has also acquired nearly 40%, the remaining for PET bottles, and which is in-housely used by Varun Beverages in India, and now it will be used in Africa as well. Apart from that, what are the brokerages saying on this deal? Axis Cap is saying that the acquisition has been done at an attractive valuation. The deal is likely to be around 3% EPS accretive and will add in a track record that we have seen for Varun Beverages. Apart from that, this acquisition is pretty much in line with the company's strategy and plan going forward, and this acquisition would add nearly 5% to the EBITDA and would be marginally EPS accretive by around 3 odd %. MK's view is of that the acquisition should be earnings accretive and should increase.
Do stay with us because the lackluster earning, what we saw in Q2, this was quite in line as per the expectation. But do tell us about the biggest upgrades and the downgrades that has come in from the brokerages.
Well, the earnings season has been quite muted for Indian companies, and there have been more that we have seen for the Indian companies. Now we are only taking those companies that have at least 10 analysts covering those stock, and the biggest downgrades are for Avenue Supermarts. 7 downgrades that we have seen post the company reported its weak set of numbers. IndusInd Bank has seen 6 downgrades. SRF has seen 5 downgrades. GSPL, that's now when it comes to biggest upgrades, is Metro Brand after the company showed initial signs of some recovery in the same store sales growth. Apart from that, it's Reliance Industries which has seen nearly 6 upgrades during this earnings season, and that is most likely because of the sharp fall that we have seen in the share prices. District Credit Access Grameen, Manappuram Finance and RBL Bank, which have seen a target price cut of anywhere between 18 to 42%, and all these 4 companies have seen a target price cut just because of the MFI issues. Apart from that is Aarti Industries. After the company reported a weak set of numbers, target price has been cut by nearly 23%, and target price by around 44%. MCX, Amber and Paytm have seen a target price hike of anywhere between 30 to 44%. And lastly, it was V-Mart Retail, which reported nearly a 20% revenue growth, which was the second best in the industry that we have seen when it comes to apparel.
Quarter, and what kind of upgrades and downgrades then they had. But moving on, Power Ministry is planning to launch a new scheme to promote energy efficiency called Aditi. Government is also likely to allocate 1,000 crore rupees for the scheme. Then Prakash Priyadarshi is standing by with more details. Prakash?
Government, if they undertake energy efficiency measures, sources are saying that the Power Ministry will introduce a scheme called Aditi, where industries falling under MSME category will be eligible for financial incentives. Along with that, an interest subsidy of 5% and 10% companies will not be part of this scheme. Focus will be provided to the small industry, primarily industry falling under MSME category, and therefore large companies are not part of this scheme. Sources are saying that the government is likely to allocate around rupees.
Get you all the buzzing stocks and the brokerage notes. Don't go anywhere.
More news and updates then, and Ansha standing by with the futures and options roundup.
So in previous session, we saw strong selling in the market. If we talk about FIIs, then in index future, they have added some long by around just 840 contract. But on short side, we are seeing that they have added around 11,000. Till we stay in this range, we can expect some consolidation phase in the market. Also, if we see in the chart, then in the previous session also, we were protected from that November lows. We didn't breach that low, so we can have some positive hopes in the market. But if we talk about index futures, then we are seeing that open interest has gone up by around 4 pack, indicating very strong resistance around this level. Now, if we talk about Nifty Bank, then index has actually formed a bearish engulfing candlestick pattern, which usually indicates a potential reversal in trend on downside. It also continues to hover around the 100 EMA from last 29-30 sessions. So here also we are seeing around 15%, indicating very strong bearish sentiment. Also on option front, today we have Nifty Bank weekly option expiry. So we may see some good volatility in banking stock. And we are seeing very strong call rating happening at 51,500, indicating option traders are expecting strong selling pressure around this level.
So tell us all the stocks that could be buzzing on the back of earnings as well as other news today.
Yes, good morning. So let's take a look at all of the stocks that are going to be in focus today. First up, we have Nykaa reporting their Q2 FY25 numbers. Now, we've seen quite a weak set coming in for Nykaa. There's been a miss on the revenue growth of 28% on the EBITDA front, but the margin has been flat around 5.5%, but still a miss on all three fronts. We've seen higher marketing expenses in this quarter, but going forward, the company says that they are comfortable with the product mix, and overall, the fashion industry is hoping for better outcomes in H2. So keeping this quarter after the CPCB 4+ norms have been implemented, on the revenue front we've seen a slight miss, although it has gone up around 15% on a year-on-year basis, but this miss must be maybe due to the 13% year-on-year fall that we've seen in the B2C segment due to the plant transition. On the EBITDA, healthy expansion of 407 basis points coming in at 19.5% in this quarter, and going forward the management has said that they remain cautiously optimistic on demand, which is likely to pick up in the second half of of the year given the low base we've seen this time round. Let's also talk about Ashoka Buildcon. We've seen a good set of numbers coming in there. Revenue margin front as well, going up 1100 basis points, coming in at 36.4% in this quarter. We also have Suren Pharma reporting quite a weak set of numbers. We've seen a growth of 11.5% on the revenue front. Net profit and EBITDA have both gone up by around 3 and 5% respectively. On the margin front, we've also got Greaves Cotton reporting weak set of numbers. Revenue has gone down around 3% on a year-on-year basis. EBITDA has seen a decline of over 50% over the previous year, and the margins have also seen a steep contraction of 305 basis points. Let's also shift focus to Aurobindo Pharma, for which has approved the proposal of a capital investment of 60 million euros or 655 crore rupees to build a 1.8 lakh ton per annum pharmaceutical grade sodium bicarbonate plant in the UK. And lastly, we're also keeping an eye out on Ultratech Cement, since they are going to consider a fundraise of up to rupees.
As NTPC with an outperform rating, Varun is standing by to break down the key takeaways of these brokerages.
Companies with an upside company is ready to capitalize on the capex cycle, and the company would benefit from the sharp increase in transmission capex. Also, they prefer Power Grid over NTPC. They say that the company is a play on energy security and transmission, and the company will benefit from this. Also, nuclear could be a long-term driver for this company, and the stock has given good return over the last 3 years, but they remain impressed with the solid visibility of the business. Also, for REC, they have a price target of 660 rupees. They say that the benefit of good cycle will help this company. For both this company, they say that there has been a recent rally in the stocks, but they expect this company to benefit from the asset resolution % on PFC and 660 on REC. That's an upside of around 28%.
So positive report coming on power finances, power stocks, and relatively these stocks have not done that bad as compared to the other pockets of the market. Thanks very much, Varun. Let's see how these report today. Let's understand what the street is penciling in.
Well, Eicher Motors is expected to come out with a decent set of numbers. We are expecting the revenue growth of around 7%, which will be led by the increase in realizations and the average selling price, because overall volume in the quarter gone by was fairly tepid on the higher side. And this is something which will aid the margin profile as well, because the product mix has turned favorable, plus that better realization coming in will augur well for the margins. Having said that, there were a couple of launches that happened in the quarter gone by, which means the advertisement spend might be higher, and that's why the margin growth, field margins, it's expected to remain stable quarter on quarter, 28% thereabouts, and the VCB margins are also expected to remain flat quarter on quarter. So just watching out for some of these internals going forward. The management's commentary regarding competition, way forward, the product pipeline, and the overall pressure when it comes to the retail sales in the festive.
So there you go. Those are the expectations and what they look like for Eicher Motors' second quarter. But with that, completely out of time on this edition of Market Cafe on ET Now, from me, Shriyanti Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning in. Don't go anywhere, because the market takes all of the action forward.